Hello, traders. Guten Tag, bonjour, salam alaikum, shalom, all that good stuff. Thanks for joining me for another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 1567 of the Trader Bite. Today is the big day. It is Fed Day. The expectation and the probability that's priced into a Fed hike of 25 basis points is 78%. That does not mean certainty, but certainly a huge number of market participants who look at this stuff have a 78.1% probability of a 25 basis point cut. I meant cut. cut. 25 basis point cut in the Fed funds rates, and about 21.9% are pricing in a 50 basis point cut. Um, and if it comes in line, again, when participants are pricing this in or are expecting it, generally it gets priced in. The markets are relatively efficient. So if we get a cut of 50 basis points, expecting a much higher pop, at least initially. If we get no cut at all, we may see 29.60 today. So in either case, this is a relatively big day, a historic day for the markets. That release comes out at 1 Central, 2 Eastern, with the press conference uh, describing what the FOMC came up with and answering questions occurring at 1:30 Central, 2:30 Eastern. So that's where we are this morning. Just, the big thing I have to say about today is this is not for everybody trading this big an announcement. Um, Please, if you're trading, trade the micros. If you're trading the indices, please trade the micros, even if you normally trade the ES. Minimize your risk, trade small, and best yet is to just let the flutter occur at 2 p.m. Eastern. Wait for about 5 minutes, look for the market direction or the dominant force, trade from that direction, but then make sure make sure you stop before the press conference and let that kind of play out a little bit. We expect to see some kind of, as we say in the business, pardon the expression, stupid shit happen today. Um, so there are all kinds of positioning. There's all kinds of hedging that takes place. Volatility is expected to spike up in either case. And so it's not for everybody, okay? It might be thin and fast. Make sure you have access to your account number. Make sure you have the number for your trade desk for your clearing firm. Make sure you have your UPS is working. Make sure you don't lose power in the middle of a position. This is one of those days where you need to make sure your ducks are in a row if you're going to trade. Best not to trade, in my opinion. Anyway, so market sentiment this morning. Slightly on the risk-seeking side, not by much. Crude oil broke higher, trading at 58.60, up 55 cents or almost 1%. It broke above last Wednesday's inventory reports, which topped out at 57.24ish or something, and it's been inside of that range for the last week and has broken to the upside now, expecting it to test around 60.15 at some point in the next day or so. And the Nasdaq is up 26.25. Of course, Apple announced yesterday the Nasdaq's up 0.33%. The DAX recovering a little bit, up 28 points. The Dow up 59 points, and so on. The 10 years are up a tick and a half. The bonds are up 5 ticks, and the Bund is up 17 ticks, with the Euro stocks lagging down 3 ticks. That's the weakest. And the euro also off, with the dollar off and the yen off. The yen off by just a tick in the futures. So that's where we stand this morning. Looking at What's ahead? We did get some significant releases overnight. We got the consumer confidence number out of Japan at 1 a.m. Eastern. We got some numbers out of Spain. The Eurozone GDP growth came in line at 0.2%. GDP growth in Italy came in worse or better at 0% versus negative 0.1%. ADP came out at 156,000, expected 150,000. Remember, non-farm payrolls in 2 days, and the ADP is used as a potential proxy measure. Um, and then today we get Chicago PMI, which can be a mover if it's way off, expecting 50.6. And I'm going to remind you that even though it's scheduled at 9:45, subscribers, it's a private number. Subscribers can get it 3 minutes early. We get crude oil at 10:30. We get the Fed, the big one at 2. Fed press conference at 2:30, and then the manufacturing PMI number out of China. This is relatively significant at 9:45 Eastern. Okay, hope you are hearing me loud and clear. So let's get into it. Let's take a look at what was expected yesterday versus what we got. Um, Overall, the expectation was for the primary expectation given what we'd done. We broke higher, put in a new high, had an inside day, then gapped lower. The expectation was we're likely to run into some serious resistance on the way up. Expected the market. So if we look at the green, which is the main trade of the day, the big idea of the day, the expectation is that the market's likely to revert back towards 2015-50 and is likely to stall between 2010 and 2012, with 2015-50 being key up here. And then the expectation is for those buyers to get flushed out and for it to spike down. And then I expected it to start making its way down towards 3,000 and 29.98 to 29.97. That's the primary expectation. The one that actually worked out is scenario 3, almost to the dot. A push down towards 3,000 takes out the overnight low somewhere. It ended up taking out the overnight low at 3,004 and pushing into 3,150. And then we get a spike up. We get an impulse up, as you see here, with a push to 1550, go sideways, and then push up into the range and hit that 18 quarter 19 area right here. You can see it on the scale. If you're not seeing this clearly, switch to 1080p for high definition, and you'll see it saying 3018 right there, and then it's likely to go sideways into the close. Here's what happened. Again, scenario 3 is the one that ended up working out. We did have an open auction instead of an open test drive. We auctioned up, down, retested, and then this is the impulse up that I was talking about. We initially tested this area here between 3010 and 3012 and expected the rotation down to actually come up, fail, and then start move down for the primary scenario. This would have been scenario 1. If you recall, scenario 3 was open, test below, and then push up, consolidate, push up, consolidate at 1550, then push up into 1850 or so and go sideways. That was scenario 3. And you could see the bar chart here of what happened. This is a 2-tick Renko chart. It's my trigger chart. In either case, we have pretty good rejection of the lower end of the range, acceptance into almost the prior day's low. We did get this push up into 1850 on news, and I kind of hesitate to call it news because what it was is POTUS, Mr. Trump here, President Trump announced that he's expecting some sort of a trade deal with China. It's either going to be a good deal or none at all. We'll see what happens. So you'd think that that's really not describing anything or doing anything for the market. There's not enough information there to revalue the market, right? But the market spiked up. And it was supported by a long consolidation in this zone here. There's a lot of compression happening right in the zone, and it ended up relieving itself to the upside on some pretty good aggressor buying. So maybe the news is a coincidence. Maybe the news was the catalyst with the energy having been pent up for hours right here. And this is a big zipper. The energy being pent up, the news just tipped it over and pushed it into the prior day's range. Look at that test, 1550 on the nose. Also, the mid test right here was on the nose. It appeared to me that after this push, this initial impulsive move up, it appeared to me, to be honest with you, that the day time frame trader was in control, was likely in control yesterday, as it was respecting a lot of day time frame levels, like we see here, VWAP getting tangled in VWAP and things like that, the mid holding, and so on and so forth. I mean, it tested VWAP so many times yesterday. So that's what we had yesterday. So we finished up with somewhat of a P-shaped profile with a weird-looking top. The news was, the news was reverted back. So we went back to the SOC of the news right in here into 3012 or so. The news was taken back right away as we would normally expect. And then from there, the overnight session immediately popped. So we opened and we immediately pushed higher. The overnight sessions have been so tight. I might expand the scale here. So we open up and we immediately push higher, and we don't really look back. So what we end up with in the overnight is somewhat of an excess at the low, and the market accepting with a very, very balanced profile, accepting higher valuations with the point of control being at the prior day's high minus a tick, and generally holding on pretty steadily to above the mid. The overnight inventory is almost all long. Pretty much everything is above the clothesline. However, the delta is negative on the session, has been hovering, has been snaking around the zero line. So despite the fact that prices have kind of trended up in the overnight session, overall there wasn't much aggression, and the volume was pretty decent actually, but it's not seeing price and delta are not moving in the same direction in the overnight session. Not sure what to make of that. All I know is that it left an excess from the prior day's close, a small excess, and accepted balance higher. The market is pretty stable, so to speak, pretty balanced, and is holding on to higher valuations. Now take what happened here versus yesterday's Globex session, right? Not yesterday, well, Tuesday night, Monday night, Tuesday morning. This was the RTH or pit session, and here we have last night's Globex session. You could see that we have taken back more than the mid of this entire sell-off yesterday, and in the overnight, it seems to want to come back to equilibrium in the 22 to 25 area up there. It seems like the market is really leaning to the long side still. So not a great deal for those who are thinking bearish. Let's look at the liquidity overall. Remember, this is FOMC day, very important. Overall, not much to take away from this picture. Let's color it. We have some at 30.22.50 that's been around for a fair amount of time right up here throughout the session. It's pretty heavy up there. Some heavy bids at the prior value high at 30.15 as well. And other than that, there's really not all that much to glean from the order flow this early. I mean, the picture changes relatively dramatically once the market opens. You can see there was a stable bid at 3003, but that bid has canceled here It's gone away, and not probably not very reliable. I'd like to see if that comes back at 3003. That would be an area I'd be interested in because the 3003 ties in with my stock zone area, and then whenever those two kind of come together, I'm ready to take action. So that's the order flow picture. I'm running out of time here. Let's take a look at what's expected for today. So real quick, given the stance of the overnight session and where we are, the expectation is an open auction in range out of value. I expect it to test down. I expect the market to push higher and come back into balance at 30.22, taking out the overnight high and then holding steady for the FOMC. So like always, I have to draw a line and say all bets are off when it comes to the FOMC. And then from there, my expectation is it's most likely to make new highs. But if the FOMC surprises, who the heck knows? I do not have a secondary, tertiary, or whatever because it doesn't really matter today. Overall, the expected behavior is that it's really expect the market to do whatever. The potential is also to push to the high, impulse down, stay in equilibrium, stay in yesterday's range, and then it does what it does at the FOMC as well on scenario 2. So it's really hard to say, and I'll just be guessing because most of this morning, the first hour is going to be quite. Most of this first hour is going to be quite. There's going to be quite a bit of business at the open. I expect people to balance their positions against their stock portfolios for the indices and stuff. And then from there, after the first hour, I expect it to just go quiet. I do not plan to be busy or very active in the Convergent chat community today. After the first hour or so, I'm going to go take care of other business until the FOMC comes around. Okay, so keep your powder dry, as they say. Keep retain your bullets for when the volatility comes. Volatility spells opportunity for loss and gain, right? Volatility helps us make money to an extent. Too much volatility is also unhealthy, kind of like too much water, too much of anything. But that's where we stand. Just be patient today. Don't get yourself in trouble, and certainly don't defend a position beyond its expected risk. If you don't know what the expected risk is, you have no business trading. Good luck.